All right, what's going on, everyone? This is going to be trade recap for for this morning, and as you guys can see, this morning I only took one trade on my live account, and I did take another trade, but on a funded account I'm trying to pass. Um, and I'll show you guys afterwards what trade it was. But for now, I want to talk about this one. So basically, this morning, what I was looking for was um, these London lows right here and these equal lows to be swept, right? Relative equal lows. And if you guys are wondering what indicator is this, it's literally just called a New York London session. But basically, I marked out these two lows, right? Because I know that market was drawn towards these to sweep liquidity. So this morning, market opened right here, 9:30. And all I was waiting for was a move down into these two zones of liquidity for me to look for a long setup, right? Because I'm not going to look for longs or shorts because it's swept no real liquidity. I'm going to look for shorts because these equal highs right here weren't swept, right? And I'm not going to look for longs because at 9:30 it was still in the middle of this and these hadn't been swept. But I was just waiting, patient. Um, um, Looking at my computer screen, and the play ended up happening. So what happens? Market comes down, sweeps London, but I was still waiting for the sweep of the equal lows from before. As you can see, it sweeps them, right? It takes out those orders that were resting below those obvious points of liquidity. Once it does that, now now I'm actually looking to place trades. Now I'm looking for my strategy to play out. And then what happens here? On the 3 minute time frame, I see that there's a three candle formation I was talking about. So I see these three candles form, and then they leave this gap in the middle, right? Right here. So the moment I saw this break, I entered. So as soon as this candle closed above, I entered here. And I put my stop loss below the gap. I put it around here. So as you can see, the moment I entered, it instantly goes down. But all it does, if you go on smaller time frames, look, for example, in the 2 minute, all it does is it comes down and retraces into that fair value gap. Why does it do that? Why did it go from breaking from breaking a fair value gap to then respecting one? Well, because the moment it swept all of this liquidity, the moment it did this, the moment it swept this and it swept this, right? Bias was most likely going to change. And what did I say about fair value gaps and bias? For a fair value gap to work, the bias needs to be correct, right? There needs to be um, the correct context. So the reason why this fair value gap didn't work, right? The reason why price didn't go in here and then bounce back down is because market had no more reason to keep going lower. It had already swept these obvious points of liquidity. So why would it keep going lower? It makes no sense, right? Odds are it's not going to do that. But the moment it sweeps this and it goes up, it disrespects that, right? Telling you, hey, market like bias has changed, it's no longer bearish. And then even on top of that, another confirmation to tell you that market structure has changed is it respects the bullish fair value gap, right? As you can see here, it comes down and it doesn't break it. It comes down, it fills orders, right, with the wick. The wick comes down, fills orders, but the body of the candle doesn't close below any gaps. Now, on the 1 minute, it does, right? It closes below this. But this isn't clean. This isn't a clean setup for fair value gap. You want, as I said, you want to keep going higher time frames until there's clean fair value gaps with the 3 candle setup. As you can see, you can see that on the 2 minute, right? See 1, 2, 3 right here. So it swept this, came back down, respected this fair value gap, right? Used it to fill orders to keep going higher, and it did exactly just that. Fill these orders, went higher, and it went to my take profit. Now, the reason I put my take profit here is because, well, first of all, the first move I did during this trade was I set my stop loss to break even the moment it went above this high. Why did I do that? Well, because market had no reason to come back down after it took out this high, right? Because if market really changed to bullish, if bias really changed, why would it come back down? It doesn't make sense. It should just take out this high and keep going higher, right? Because it's just disrespecting it. So the moment it swept this, I put my stop loss, break even. So now in this trade, I'm no longer able to lose any money, right? The only thing guaranteed in this trade is the fact that it's risk-free, that I'm not losing any more money. So after that, put my stops to break even here. And then I scaled, I had 5 contracts. So I sold 2 at this high right here. Why? Because this high is inside this fair value gap, and this is a fair value gap in a higher time frame, right, which holds more power. So this is just a point where I wanted to scale 2 here, and then I scaled the other one in the middle of this fair value gap. I'll do it on the 3 minute, and then I scaled the rest, as you can see, right here in the middle, basically. And then what happens after? It goes back down because it already took out these, and that was enough for it to respect this. But today was a good day. I'll show you guys the other one I was talking about that I didn't take on my live account because I wasn't really paying attention to it, and I just didn't want to risk my live account. The other play was this, and it wasn't as obvious. So the reason I didn't take this one on my live account was because, as you can see, whenever you want to take an inverse fair value gap, it has to be very obvious, right? The gap has to be obvious. It has to look something like this. Now, if this gap looked something like this, I would have 100% taken this on my live. But since it didn't, I just took it on an evil account, on a funded account. I was just trying to pass. Because, as you can see, it swept this, right? And on MNQ it didn't, but on NQ it did. Let me go to NQ. It swept this data high too, because at 8:30 there was news again today, and it created this candle, right? And it created a small high up here that it swept before coming back down. Also, another tip for you guys, on your paper account on the 50K, you obviously want to be trading M and Q because that's micro. That's where you could do a lot more contracts, right? Because one contract in NQ is worth $20. One contract in M&Q is worth $2. So you have more room to play with contract sizing in M&Q. But for analyzing your charts, right, you want to be using NQ. So you want to have 2 tabs open. NQ is where you do the analyzing, where you spot out the fair value gaps, where you draw out the points of liquidity, where you just analyze everything. But in M&Q is where you're going to want to be executing. The reason I say that is because the big institutions, right, are not trading on M&Q because they have all the money in the world to trade huge contract sizes in NQ. If they were trading M and Q, they would have to trade millions of contracts, right? Because it's M and Q is just basically up like a ticker that gives you the opportunity to trade in the futures market without having that much capital. And 50K is not that much capital when it comes to future. It's just enough for you to be able to trade M and Q. Obviously, you could do 25K accounts, but then you just have less contracts to play with. But these big institutions are trading with millions and millions of dollars, so obviously they're going to be trading on the higher ticker, on NQ, right, which is the more expensive contracts. So that's why analyzing the chart in NQ is much better, because that's where the institutions are placing their trades, not on M and Q. But with a 50K account, you should be placing trades on M and Q. So whenever you see anything happen in NQ, you're like, okay, I would enter. If I was on this chart, you just go to the other tab and enter on that one. So you want to have two tabs open. And that's basically going to be it for this trade recap. Hopefully you guys understood why I took this trade and why I set my take profits where I put them and why I set my stop loss where I put them. But yeah, I'm going to be posting, still going to be posting trade recaps on the feed of how much I lost in the day. And then I'm going to see if I could link this video in the section of that. But yeah, hopefully you guys enjoyed and have a good rest of your day.